Brilliant. Fantastic. So I want to welcome each and every one of you to today's session on Forex patterns, unraveling the secrets of technical analysis in Forex trading, right? I inquired earlier to know where each and every one of you are connecting from. I see Mr. Peter Okiti from, this is UK. From the UK, the United Kingdom, Jones is from Dubai, Kerisa is from England, David Scott is from New York City, the United States of America. I see US Baba from Nigeria. My own personal Madam Ioma from Nigeria. I see Miss Egg from Zimbabwe. I see Godwin from Nigeria. I see PG. I see PG from Nigeria. I see Madam Cornelia, what's going on from Lagos, Nigeria? So I want to really welcome each and every one of you once again. My name is Emmanuel. I am super excited and elated to be hosting this call at this time. It's a straightforward call. It's also going to be an interactive one. I want to quickly know, how long have you guys been trading? Let me know on the chat box. Please just put on the chat box. Let me know how long you've been trading. Right? Let me know how long you've been trading. Don't worry. I know our case study. Our case study pairs are GPP JPY, AUD JPY, and the British US dollar. So we're going to be working on 3 currency pairs: the British pounds to the United States dollar, the British pounds to the Japanese yuan, and then the Australian dollars to the Japanese yen. So I want to ask a question. I asked already, but I'm going to ask again. Let me know how long you've been trading, and let me know what pattern you know. Ladies and gentlemen, there are several patterns in the foreign exchange market. Am I audible? Am I audible enough? I need to disconnect this headset. Okay, good, fantastic. So there are different patterns. There are different patterns in Forex. I'm not a Forex professor. I'm a Forex investor and trader. When I say professor, I mean that I'm not the one, I don't concern myself with the bunch of information as far as Forex is concerned. No. I basically focus on the relevant information that would help me make money consistently. Right? So there's so many different patterns. You want to talk about the ascending and descending, and this is according to forex.com. They have about 12 different patterns. You have the ascending. To tell you the truth, I have to look at a book. As I told you earlier, I don't study these things. They're too much. And maybe you should know right now, the more you know in Forex, the complicated it becomes. So if you've had the knowledge of, oh, I just need to read so many things about Forex, hello, at the end of the day, you're going to end up becoming a professor. And I don't want to start bringing limelight into the differences between a professor, and a Forex trader. No, I don't want to do that, right? But there are people who know so much information about Forex, and presently it's complicating things for them, right? So there are ascending and descending staircases, the ascending triangle, descending triangle, symmetrical triangle, flag patterns, the wedge patterns, you have the double top patterns, you have the double bottom patterns, you have the head and shoulder patterns, you have the rounded top or bottom patterns, you have the cup and handle patterns, amongst so many others, right? But the truth is this, I've been trading for over 4 years now. By July, I'll be 5 years in trading Forex. And I've only been focused on one particular pattern. It's a pattern that I started learning back in 2019. It's called harmonics pattern. At the harmonics pattern, we used to, okay, so I was with a company at the time. I'm not going to mention names, but I was actually learning how to trade Forex to a company, an international company at the time. And then they had this software called harmonics, right? So it was through the software I figured out the different types of patterns. And ladies and gentlemen, I am not here to say that harmonics patterns are the best. But I'm here to tell you that if you're looking for common patterns in the foreign exchange market, most of the time you find harmonic patterns. Like I said, I understand there are so many patterns. There's so many patterns. I think one of the most common ones are the head and shoulder. Head and shoulder is a very, very common pattern. But I'm not even here to talk about head and shoulder. I'm here to basically talk about the harmonic patterns. Now, in the harmonic patterns, we have three types of harmonic patterns. Let me share my screen. Let me share my screen. Moment. Meanwhile, I'd love to know what currency pair. What's your favorite currency pair? Everyone, drop it on the chat. Let me see what your favorite currency pair is. What is your favorite currency pair? Don't list more than one. What's your favorite currency pair? I want to see things now. What is your favorite currency pair? Yes, what is, I don't want to use the word R. If I use R now, then it means I'm going to look at it in a moment. Your favorite currency pairs, where are they? Let me check the chat. Okay, please, when I ask a question, I'm expecting everyone to put in their feedback. It's very important. Like I said, the opportunity you have over those who are on YouTube is that this is going to be interactive, right? For YouTube participants are probably just going to be seeing this and then watching it and will not be able to interact. All right, so I'm seeing, let me check this. I see gold, I see AUD/JPY, I see GBP USD, I see Euro AUD, I see GU, I see AJ, I see USD/JPY, I see Euro USD. So I'm trying as much as possible. I want to try as much as possible to focus on the, excuse me, the most common one here. I see GU is common. Yes, GU is common. I think I have about 2 folks or 3 individuals who are trading GU. I see AJ is common too. And then I'm seeing EU. Only one person has EU. Gold. Now, I'm not going to look at gold. Only one person is trading gold. Only one person has gold as his favorite. But the rest of us have not commented. Is it that we don't have any favorite currency pair? I'm trying to understand. So I see AJ will be considered, GU will be considered. Okay, let's start with, let's just work on the three. GJ, GU, and AJ. Right? Now, as I was saying earlier, you have 3 types of harmonic patterns. You have the retracement patterns, you have the retracement patterns, you have the extension patterns, and you have the dynamic patterns. Right? Now, under the retracement patterns, what's this? Just a moment, please. It's supposed to be on the beginning. Okay, so under the retracement patterns, you have the Gartley pattern. Maybe I might have to write this out. So remember, 3 types of patterns. These are the most common patterns, actually. 3 types of harmonic patterns. The first one would be that one. First one is you have the retracement patterns. The retracement patterns. I have a picture for this, so you'll be able to relate with it. We have the retracement patterns. The second one is we have the extension patterns. Extension patterns. And then the third one is you have the dynamic patterns. Now, pay close attention to this. Under the retracement patterns, okay, let me move this one here. So these are the types of patterns we have. 3 types of harmonic patterns. These are the most common ones. Now, under the retracement patterns, we have the Gatley pattern. Gatley. So I'm going to show it to you. We have the Gatley and the BAT pattern. Under the extension pattern, we have the butterfly and crab pattern. Yeah. Now, the dynamic pattern is only one, and I'll explain why. The dynamic pattern, you only have the shark patterns. The shark pattern is the only pattern you have under the dynamic. So remember again, delete this. Remember that we have 3 most common, mostly used type of harmonic patterns. And under these harmonic patterns, we have the retracement patterns. The retracement patterns will be something like this. These are Fibonacci ratio patterns. I'm going to give you the Fibonacci values. I'm trying as much as possible not to make this training complicated. But let's work on, let me just give you a diagrammatical view of the retracement pattern. So you have a pattern like this. This is the I all the way to this point. You have move like this. You have a move like this. You have a move like this. Good. Now, then you have this position. This is your I, HIGH. This is the I. 22 reduces to 24. This is the I. And this level you have here will be the retracement. This is the retracement here. Flow. Retracement. Ladies and gentlemen, what this means is that, like I said, these are Fibonacci ratios. When you have your Fibonacci tool and you pick it up from the I to the lowest point, all these levels are important levels. Price would go back to the 0.5 ratio areas, pull down, and then make its way pull back up. Now, I want to ask a question. And now I have traders on this call. When you see something like this, this I is higher than this. When you see something like this, what would you be expecting price to do with this diagram I've done? Would you expect price to go on a bearish move, on a bullish move? Are you expecting price to sell, or you'll be expecting it to buy? You would have seen patterns like this. So I told you it's going to be an interactive one. So just let me know your thoughts. Okay. Bearish, sell, somebody say buy, somebody say bearish. I have traders. There are traders on. In fact, the people I'm seeing here, majority of the people I'm seeing here are actually, they are traders. You're expecting it to go for a bearish. Now let's pick an example. Let's look for a pattern here. Something that looks like this. So you have price going up, it establishes a high, and then you expect it to come down. This is the high. We should look for a particular high. See, Here's the join I. Here's the join I have there. Thought I do something there. Okay, I'm on the daily. This should be on the 1 hour. What's happening? Hold on. Need to install this back to. Okay. My screen is not. I can't launch it. This. Hold on. So looking for a pattern. Looking for a pattern here. A high first. We get a high. Get a low. Let's work on the 4 hours. Price has actually been on the sell trend as far as GU is concerned. I see something here. This is an extension here. You have something like this here. From this level, this is an high all the way to this point, which is the low. Right? So we're going to do a pattern. Also, on your trading view, be rest assured you have patterns. You have patterns on your trading view. In your trading view, you have patterns. XABCD pattern is what you use. This is X to A to B to C, ABCD. ABCD rather. You have A to B to C to D. What's happening? A, B, C, D. In this case, ladies and gentlemen, if you look at this, this is a retracement pattern. If you look at what I drew earlier on with this, did you see this is the I, right? These are the different types of harmonic patterns that exist. Now we're working on the Gartley pattern. This is the Gartley pattern. So if you look at this, this is X to A to B to C to D. So from your X, using your harmonic pattern, you're bringing it from the I, all the way to the low. And then you're going into 0.5 retracement area. Look at this. I don't know why TDV is not. Okay, let me take a look at this. Wait, first and foremost, let me ask, how many of you know how to use harmonic patterns? The harmonic, I said harmonic, sorry, the Fibonacci retracement tool. If you can use Fibonacci retracement tool, please drop in one on the chat. Let me start with that. If you cannot, put in 0. This session is for both beginners and intermediate. I don't want to complicate things. But I don't want to complicate things. 1, 0, 0. Okay. I see 1, 1. 0, 0, 0. Are you serious? I have more individuals who cannot use Fibonacci retracement. Okay. If that's the case, So if that's the case, I'm probably going to have to switch this thing in, but still maintain the objective, right? This is it. Let me take it away from all of this. Don't worry. It's of no use if I'm teaching something that majority of you cannot comprehend. So let me switch. I'm going to adapt. Now let's talk about patterns. We're talking about Forex patterns. Outside the harmonic patterns, there are simple ways at which you could identify patterns in the market. Simple and direct. Now, first things first, ladies and gentlemen, the number one motive of a Forex trader is to trade with the banks. Because you remember that as a trader, as a retail trader, you do not have the financial, you don't have the financial resources to trade like the banks. When I say financial resources, I'm saying now that you have the banks putting in millions to billions of dollars into the Forex market. You're a retail trader, you're putting probably thousands or tens of thousands or maybe maximum hundreds of thousands of dollars. And also remember that the market moves in the direction of liquidity rather. The market moves in direction of liquidity. That's to say that if you have two people that are putting in about $5 billion to sell GBP USD right now, and you have, remember, two people putting in $5 billion to sell GBP USD right now, and you have 1,000 people putting in $2 billion to buy GBP USD. Let me know on the chat box, what do you think GBP USD will do? You have two people that are putting in $5 billion to sell GU, and you have 10,000 people that are putting in $2 billion to buy GU. What would GU do? GU will sell because it's not a game of quantity over the amount of liquidity. The buyers are putting, even though the buyers are high in numbers, you have about 10,000 buyers. The fact that there are 10,000 buyers with less than $5 billion is what would make GU sell. The market moves in the direction of liquidity. So if you have the sellers putting in $5 billion to sell GU at this time, and you have the buyers, regardless of their numbers, putting in $2 billion to buy GU, the market would go for a sell. So in other words, that would make you understand that as a retail trader, you're supposed to be trading in the direction of the banks. Why? Because the banks and other liquidity providers are the ones that we know actually have the financial resource to move the market in the way they want it to go. Now, the question is this: if I am supposed to trade with the banks, if I am supposed to trade in the direction the banks or the looking for the right word, in the direction of the banks or the hedge funders, right, or the major investors in Forex, if I'm supposed to trade in their direction, how then would I have an idea? How will I know what direction they are looking to trade at? So this is GU right now. How can I understand the direction the banks are looking to buy or sell a currency pair? Number one thing you want to do is locate the higher time frames. There are different time frames in the foreign exchange market, ladies and gentlemen. You have the 1 hour, you have the 2 hours, you have the 4 hours, you have the 15 minutes, you have the daily, the weekly, the monthly. If you want to know where the banks, if you want to know the direction the banks are looking to take a currency pair at a point in time, go and check the weekly or the daily time frame. You have an idea. Let's take a look at this quickly. Look at this. So we're going to go back in time, ladies and gentlemen. I had to switch this training. I was going to teach about harmonic patterns and how to, but don't worry, we can always do that some other time. Now, this is what I have. The information I have on my chart right here is beginning from the month of the year 2006 all the way to the year 2024. That's over how many years? 24, 2014. That's almost about 20 years, right? This is the weekly time frame. Now, on the weekly time frame, ladies and gentlemen, I'm going to mark some spots. I'm going to mark this spot right here. mark this right here. I'm equally going to mark this right here. Then I'm going to mark this right here. I want you to pay close attention to this. Remember, what we're looking for here is to identify, to understand what the banks or where the banks are looking forward to drive the market into. Now, the banks don't trade the 1 hour time frame the way I trade the 1 hour time frame or the way you trade the 1 hour time frame. What they do is they trade the daily, the weekly, and the monthly time frame. Now, if you look at this closely, ladies and gentlemen, we're still using GU as a case study. We have this. Okay, so I marked this on the weekly. Let's move to the daily. To be very, very easy to comprehend on the daily compared to the. Yes, we're still here. So this is the daily time frame, ladies and gentlemen. I want you to pay close attention to this. Now, in the month of August, 2009, yes, in the month of August 2009, we have this. In the month of August 2009, we see how GU moved all the way to the top and started coming down. That's August 2009. Pay close attention to this. In the month of November 2009, a couple of months later, we equally see how GU got to the same spot it got to in the month of August. We see how it got to that point and then it reversed down. Let's move forward. Let me see if price ever came down. Good. Price equally came down here all the way to this point. And then see this. Now, years after, when I say years after, this is two different things that happened in the month of in the year 2009. Years afterwards, in the year 2011, GU went back to that spot and reversed back. You know what this is teaching you? It's giving you blueprints. Everyone type in blueprint on the chat. Blueprints. Because with this, it's making you understand that, oh, price got all the way to this point and reversed. So it means that in the future, there's a big tendency, there's a high tendency that if price ever gets to this particular area, because I've been able to go back in time, go to the daily and the monthly time frame, there's a high tendency that price would also reverse back at this area. Let me say this, and I've said it over and over again. Whatever the market is doing today, see, for every one of you who is looking to trade Forex, either full-time or part-time, the greatest joy you should concern yourself with is the fact that whatever the market is doing today would be a reversal or repetition of what it's done in the past. Forex is not difficult. Forex is not difficult. All you need to do to be successful in trading is for you to be able to go back in time, check, oh, price is at this particular area. Let me go back to see in the bigger time frames. Now, you're using the bigger time frames if you want to trade with the banks. So you're going back in time to see that, okay, let me see, when price was at this point, a couple of months back or a couple of years ago, what did it do? If you can identify that blueprint, where price is at the moment, if you can identify the blueprint in the past, and you see what price did in that past, you would make good decisions in the present time. So it simply means that if this was the month of April 2011, right? And then price was sitting around this area, and then I'm able to like, okay, you know what, let me go to the daily time frame. And I take it back in time, only for me to observe that, oh, in 2009, when price got here, it came down. What do you think that would teach me? It would teach me to understand that there's a high tendency price would go for a sell. And did you see what it did here, ladies and gentlemen? Did you see that move? Moved up, came down, moved up here. Did you see how it fell down? Does this make sense? So because I've been able to go back in time, I've come to understand that, okay, let me take it back this way. Do you know how the banks trade Forex? Let me share it with you now. Do you know how the banks trade Forex? The banks don't trade Forex the way we trade Forex. We trade Forex by saying, oh, market is at this point in time, let's go for a sell. No, the bank trades Forex by using what we call pending orders. Now, for those of you who have gone through the basic approach to Forex, you understand that we have different types of pending orders. You have the buy stop, you have the sell stop, you have the buy limit, you have the sell limit. It simply means that if market was going up at this particular point, right, a sell limit means that when price gets to this particular area, you're expecting it to sell. This is what the banks do. They put in pending orders in areas like this. And let me tell you why they are so confident to put in pending orders. They are so confident because they have the financial resource, they have the liquidity to make price go in their direction. So imagine if it was $3 billion that was used to buy GU from this particular point and it was going up. And then the banks just put in a pending orders with as high as $7 billion to make it sell. What do you think the market will do? It would sell. But guess one thing you should also know again. They don't just put in pending orders in any area. No, they go back in time to see areas like this, to identify areas like this that had reversals in the past. They look out for these areas and then they put in their pending orders. Put in a 7 if you're getting it, if it's adding up to each other. And now I started on a very high pitch, talking about harmonic patterns, Fibonacci, retracement levels, but I think I've come down to your level. So let's just work with these patterns. These are also patterns in the market you should identify. But let me know if it's making sense. Right? Fantastic. So it then means now that if I'm looking to trade with the banks, all I need to do is just go to the weekly time frame or the daily time frame to identify pivotal areas, to identify zones, reversal areas, reversal zones. Take a look at this. This is a reversal zone here, ladies and gentlemen. Look at this right here. This is a reversal zone here because guess what? Price came in here in the month of March 2010. Came back here the same March, came back here the month of April. Did you see that? So you see how price keeps, how it came down here, moved up, came down here, moved up, came down here, moved up. And when you look at this, we're on the daily time frame, these are not small money. I mean, the minimum move it did here was 254 pips. If you convert that, that's about 25%. If you're trading with the necessary lot size. These are not small moves. The fact that Emmanuel, it just move up small. Move up small, that's crazy money, obscene amount of money. That's obscene amount of money, obscene, right? Even the third move we made from this area all the way to this point is about 627 pips. You take this trade with an account, you would have made 62% of that capital. And if you go back in time, ladies and gentlemen, look at this. I said something earlier. I said whatever market is doing today would be a repetition or a reversal of what it's done in the past. Let's drag this back in time. Do you see that even though this space is a support area here, a support zone, did you notice how it was a resistance zone? Yeah. This is the reversal. So what he did here was he made this place the ceiling. But getting to this point in time, he decided to do the reverse. So price moved up here. Moved all the way to this point here, came down, moved up here, came down, moved up here, came down before it finally broke. He made this place a ceiling. But guess what? The reverse was what he did there. He made it a floor here, the same zone. Now let me move this forward because of time. Now let's bring this over to the present day. So this is it, ladies and gentlemen. What I can see here, I identified that price established a support zone here, not just once. Pay close attention. We're making progress. This. Look at this. If I take this back in time, price came, or GBP USD, please remember, whenever I'm using the word price, I'm talking about that currency. Price came down here, moved up. This was the month of December 2023. It came down here, moved up. This was the month of February 2024. Came down here in the month of February, moved up. Now it came down here in the month of April. It's moving up. What do you think is happening here, ladies and gentlemen? Pivotal areas. This is a pattern. Now, if we go back in time, this is a support zone here. If you go back in time, do you realize that it was a resistance here? The reversal of what it did here is what it did here. Now, let me bring it. Remember, our topic is Forex patterns, unraveling the secrets of technical analysis in Forex. Now, let me tell you how I bring in technical analysis to this. I will close. It's not my fault. I told you I'm not going to use more than 1 hour. But we'll close. So, as at the beginning of this week, I identified this. And you know what came to my head was this. Let me show you. I cleared this and I'm like, you know what? Okay, if this is what is happening here, because I cannot trade this. I can't trade the daily time frame. I can't trade the daily time frame because I don't have the amount of money the banks have. The higher the time frame, the higher the risk. The higher the time frame, the higher the equity. If the banks are using billions to trade weekly time frame, and I want to trade weekly time frame with them, what's the reasonable thing to do? Is to look for billions. Right? But this is what I'm trying to do here. I don't have the amount of money the banks have because I'm a retail trader. But I want to be able to identify the direction the banks are looking to go so that I can, well, the moment I identify the direction, I can go to the lower time frame, like the 1 hour time frame, and then take position there and move with them. Now, how do I take this position? Look at this. So I've identified here, as at this past week, on Monday, the price came down to this spot. And this spot is not an ordinary spot. Why? Because in the past, whenever price comes there, on the daily time frame, it moves back up. Okay, my own goal is to just identify that particular area. Then I move it to the 1 hour time frame. Now, on the 1 hour time frame, this is what price was doing. Yeah. Did this here on the 1 hour time frame. So I have this marked up like this, my support zone. How many of us know how to identify support? If you know how to do a support and resistance zone, put in a 1 on the chart. If you don't know, put in 0. Let me be sure that we're on the same page. Godwin, you don't know how to. Godwin, are you new into Forex? Are you new into trading? I'm asking because support and resistance zone is part of the basics, right? But this is it. We've been able to identify this support zone. Brilliant here. Now I'm going into unraveling the secrets of price act. Okay, unraveling the secrets of technical analysis. This is technical analysis. You've identified the support here. This is a resistance here. Why? Because price moved up and came down at that point. Now, if I also pick this up and then do this, like this, I can equally go back in time to validate if all of this were support and resistance zone in the past. So let's do that. Go back in time. Do you see that? Do you see how the support zone I drew presently, do you see how it was a support zone here? And do you also see how the resistance zone I drew here was a support zone in the past? When I say the past, I'm talking about February 2024. You can take it back in time. You see how it was also a resistance zone here. You see how this support zone was a resistance zone here back in February 2024. You can take this all the way back. You would always see these blueprints. These are blueprints. These are validation. Or this is what validates that what you're drawing here is what you're supposed to draw. It can be ascribed as a zone. Now, as soon as you've done this, you've done the resistance zone, you've done the support zone, what you do here is identify the break. You need to identify the break of the zone. This is the way I trade. This is my strategy. Act strategy is also a technical and it's a price action strategy. You identify the break, you switch to 15 minutes, look for the retests, because synchronizing this to 45, look for the retest, which is what you have here. Get a confirmation, which is the candle that closes above the zone after the retest. This candle closes above the zone after the retest. Pick up your buy. Boom. 30 pips stop loss, 30 pips take profits. Ladies and gentlemen, I'm going to blow your mind in a minute. Look at this. Not only would you have taken 30 pips, yeah, you would have taken as high as this. If you're doing a twin trade, that's about 120 pips. So if you reached 1%, you'd have made 4% with this. Why do you think it's like this? It's because you're able to identify that zone as a zone where the banks, see, if you want to know what the banks, if you want to identify the presence of the banks, look for long candles like this. Whenever you see candles like this, you see this red candle. These are institutional candles. These are candles that showcases to you the presence of the banks. Long candles like this, they showcase or they depict the activity of institutional traders. Do you understand? Put in 7 on the chat box. So the reason why the market was able to move the way it's moved like this past week was because you were able to identify what the banks were going to do on this pair on the daily time frame. And not only did you identify what they were going to do, you participated with them. Now remember, whatever execution you did here, you did it on the 1 hour time frame. Whatever execution you did here was on the 1 hour time frame. It wasn't on the daily time frame. Yes, you identified the reversal on the daily, but you don't have the money to trade the daily. So what you did was you just identified the reversal. You went on the 1 hour to position yourself for an entry. That is how you trade with the banks. Should I stop the training here? I said 1 hour. I'm a man of my words. I stick to the time. Should I stop the training here? Or you want us to go into GBP JPY? Or AUD JPY? Which of them? Should we close this training here? I'm done. I was supposed to work on 3 pairs. I've worked on 1 pair. This is GBP USD. Very quickly, let me work on AJ. Okay, AJ or GJ, which of them do you want me to work on? 1 more pair and we'll call it a day. AJ or GJ, which of them do you want me to work on? I'm seeing lots of AJ. Okay, so let's go look for AJ. AUD JPY. Okay, so we have AJ now. I'm going to clear all of this. Remember, I stick it to the daily time frame. What am I looking for in the daily time frame? Reversal areas. Reversal areas. And ladies and gentlemen, Look at this. This is a reversal area on AJ in the past. And I can also see that price came in here and moved up. Came in here and moved up. Okay, you know what? Let's not even use that. Let's clear this. Then let's pinpoint this. This is a reversal area here. So I want to go back in time to see if that was also a reversal area in the past. I'm going to take it back in time. But you know what? Let's switch to the weekly. Brilliant. So I want you all to look at this. In the month of September 2014, AJ moved all the way to this point and it sold. That's a reversal. In the month of December 2014, AJ, this place was a resistance, also made this place a resistance. Moving it forward, let's see. In the month of September 2022, what happened on AJ in September 2014, 6 years later, repeated itself as a resistance here. Blueprint. Moving it forward, in the month of November 2023, what happened in September 2022 repeated itself on AJ. Now, guess what, ladies and gentlemen? In the month of March 2024, AJ did not reverse. Why? It broke the zone above. Remember I said whatever price is going to do today, it's a reversal or repetition of what it's done in the past. So this was good. This was good identification for you to understand that it's likely going to do a reversal of what it's been doing in the past couple of years. But when you bring it to the daily time frame, you understand it better. Now, price broke this zone. Came here. Look at it. The price made this break. It dropped here, pulled up. It's enough reason for you to want to classify this place as a reversal zone. This particular area as a reversal zone. And guess what happened? This week, when price came in down here, March 28, 2024, and closed above, you would have observed that there's a tendency this might likely go up because in price action, when you have a break, you're waiting for a retest for price to continue. This is the way price action is. When you get a break like this, when price breaks a zone, you're expecting a retest. If it does a retest and closes above the zone, you're expecting it to go up. That's what happened here. Price did a break here, did a retest here. What are you expecting? You're expecting it to go up. That up is what it did. That up is what it did around here. Now let's look at AJ. This is a reversal zone for me. Yeah. Bring it all the way to 1 hour. Remember, you're trading 1 hour because you don't have the money to trade the daily. Even if you have the money, you don't have the risk. When I say you don't have the money, I'm not saying you don't have that amount of money to trade. No, I'm just saying that the kind of risk you would take on the daily time frame, it's bigger than the one you would take on 1 hour. Right? So if you're risking 30 pips on the 1 hour time frame, on the daily time frame, you should be looking to risk 100 to 120 pips. Now, this is the support zone. Yeah. Right here. Price did a reversal here. When it moved up here, it came down here. Meanwhile, even if you don't want to take this, if you want to take this one, no problem. You can decide you want to take, okay, Emmanuel, but it did a reversal here now. Go back in time. This resistance, was it not a support here? Go back in time. That same resistance, was it not a resistance here? Go back in time. Look at this. That resistance, was it not a support here? Was it not a resistance here? Now look at the support we marked. Was that support not a support here? Right? Was it not a support here? So whether you want to take this zone, I'm going to show you two different things here. We are taking this zone here as your reversal zone. Right here like this. find a break here, like this, switch to 15 minutes. That's the ARC strategy. If you want to know more about this ARC strategy, you reach out to me. We have a company, we have an academy, Payward Nation. You can learn through the academy. You have access to me, to my classes twice every week, where we're going in depth on this. So you have the retest here. The candle that closes above the zone is the retest, the confirmation candle. Guess what? If you're taking this trade at the close of that candle, 30 pips. I use 30 pips. 30 pips is constant on all normal currencies. When I say normal currencies, I know what I'm saying normal currencies. We have abnormal currencies. The abnormal ones are the very volatile currencies. Look at this right here. Taking this trade, you'd have been able to leverage this all the way to the top. How many pips is that? That's 187 pips. How many 30s can you find in 180? 3 times 5, 15, 3 times 6, 18. Okay, good. So you find 6 30s. It means that if you had risked 1%, if you had risked 1% on this, you'd have made 6% on that trade. Why? You were able to identify the reversal zone on the daily time frame. Now, that's just one resistance zone. I said if you take that resistance zone, let's cancel it. Let's say, okay, Emmanuel, with that resistance zone, I wouldn't have even seen that one. I know what I'm saying. I'm saying this because of traders down the call. Okay, maybe that resistance zone is not what you'd have taken, no problem. At least you'd have considered this one. You'd have considered this one here because this is a reversal. Price moved all the way to this point, reversed. And guess what? Not only is it a reversal here, it's a resistance zone here. There was a support zone here. Right? Was a support zone here. So that would have validated was a support zone here and was a resistance zone here. All this would have validated that that place is a zone. So let's even use that. Let's use that one. Right? If you add the rectangle here, price established a break here. Right? 9 a.m. When you switch to 15 minutes, you're looking for what? To synchronize this, 45, 15, 30, 45. Guess what, ladies and gentlemen? This is your retest here. Your retest happened at this spot. The candle that closes above the zone is the confirmation candle right there. Long position above this, 30 pips stop loss, 30 pips take profit. On the first trade, the second one, 30 pips stop loss, you leave it open. Guess what? If you had left this open, you still would have been able to leverage. And this happened this week, not last week. This started on Tuesday. This is what you'd have made in 1 week. Potential, 168 pips. At least you'd have reached 1% to make 5%. Forex patterns, unraveling the secrets of technical analysis in Forex trading. This is how I unravel it. I look at what the banks are looking to do on the higher time frame. I identify a spot, a zone. I come down to the lower time frame, and then I join them in making that decision. Now, guess what, ladies and gentlemen? Price is moving to, or price has moved to a reversal area. As far as AJ is concerned, this is a reversal area here. This. If I find any red candle around this place next week, I'll identify that spot as my reversal zone, take it to the 1 hour, draw my support and resistance. Guess what? I'm waiting for price to break, retest, confirmation, and then I get into it. How many of you got value from this session? And let me also share this. This applies to every instrument in the foreign exchange market. It applies to cryptos, it applies to indices, it applies to commodities, it applies to exotics, it applies to volatility indexes. It's the same thing. It is the same thing. So whether you are trading gold, or you are trading US 30, or you're trading NAS 100, or you're trading XPS 500, or you're trading metals, it's the same thing. It is the same thing, right? You want more information or you want to go in depthly on this, you reach out to me or you get back to whoever it is, give you access to this call. I want to appreciate each and every one of you for your time. By my time, I'll still say I'm working within 1 hour because I think I started quarter past 1 because of the network glitch. And here we are. It's about 2:13 p.m. right here in Lagos, Nigeria. I sincerely want to appreciate each and every one of you for jumping on this session. I'm not going to make any promise, but I think the next session would be based on the use of Fibonacci, the Fibonacci tool. Right? The next thing would be on the utilization of Fibonacci tool so that we can move it further to identifying the harmonic patterns. Thank you so much for that. The harmonic patterns, the different patterns that exist in the foreign exchange market. Ladies and gentlemen, it's been a pleasure. It's been so much honor having each and every one of you on this session. I truly appreciate you for turning up. I'm going to upload this on my YouTube probably later in the day. But till then, I'll see each and every one of you at the top and not from the top, because you know what we say, the bottom is way too crowded. And guess what? We do not look down, except we're looking to drag